Hey everyone, welcome to our channel. In this video presentation, I'm going to show you how to minimize your tax burden using an offshore company. But first, there is a big myth we need to clear up. Many people think that simply setting up a company in a tax haven jurisdictions will magically make all their taxes disappear. Unfortunately, it doesn't work that way. Just because you incorporate a company in a tax haven country doesn't mean you can enjoy a tax-free business without any problems. You must make sure your offshore company isn't gonna be taxing your home country. And I'm gonna show you how to do it now. Before we start, it's very important to understand that corporate tax is different from personal tax. Corporate tax is the tax your company pays on its profits, while personal tax is the tax you pay on the money you earn, like salaries or dividends. Offshore company establishment helps you minimize your corporate tax. However, with a proper structure, you can minimize both personal and corporate together. Let's first see how we can minimize corporate tax using an offshore company structure. Let's say you're a business owner living in a high corporate tax country like Japan. You might want to find a way to minimize your business taxes. So, you're thinking of setting up an offshore company with an offshore bank account. It could be a perfect solution if it's done correctly. To minimize your tax burden, you need to design your business structure in a way that your company is taxed only in a low or zero tax jurisdictions. This might mean setting up different parts of your business in different countries to take advantage of their tax laws. Here are some key factors to consider when designing your offshore company structure. First is corporate tax residency. Corporate tax residency plays a huge role in the process. It's not enough to just set up a company. You need to structure it correctly. Corporate tax residency refers to the country where a company is considered residence for tax purposes. The rules for determining corporate tax residency can vary between countries, but generally, it's based on factors like where the company is incorporated, where its management and control are located, or where it conducts its business activities. Typically, there are four types of corporate tax residency. First one is incorporation-based residency. It means a company is considered a resident of the country where it is incorporated or registered. For example, a company incorporated in Canada is considered a Canadian resident for tax purposes, even if the company conducts most of its business elsewhere. The second one is management and control-based residency. A company is considered a resident of the country where its central management and control are exercised. For instance, a company incorporated in Cayman Island, but the main decision makers or board of directors are located in the UK. This company would be considered a UK resident for tax purposes. The next one is place of effective management. A company is considered a resident where its effective management decisions are made. For example, a company incorporated in Singapore but effectively managed from India would be considered an Indian tax resident. And the last one is business activities-based residency. A company is considered a resident if it conducts substantial business activities within a country. Like a company incorporated in Ireland but with substantial operation and income generated in Germany might be considered a resident of Germany for tax purposes. So to sum up this part, if you live in the UK, you need to incorporate an offshore company in a way that its management and control happen outside of the UK, either in the same place of the incorporation if regulation allows, or somewhere else. Understanding corporate tax residency is crucial for companies because it determines where they need to pay taxes, which can impact their overall tax burden and business strategy. Once you check the tax residency rules, you also need to check if your country has a specific tax regulation regarding offshore companies. For example, Japan has a specific measure to calculate tax for Japanese residents who have offshore companies. They normally call it paper companies or shell companies. If they fall into any of those measures, they will be taxed in Japan no matter how they structure their company. So this is an important factor to consider before incorporating any offshore company. Another factor you need to consider is the nature of the business. The nature of the business significantly affects the design of the company structure. Should your business be operated in a specific location? If yes, a specific design is required for you to be able to save taxes. Or this is kind of business that can be done from anywhere in the world, or Does your business require a license? If yes, for example, if you want to establish a company that does cryptocurrency exchange, you may need to consider countries like Poland, Estonia, or those who offer license. Or is your business activity categorized as a high risk or low risk? This may affect opening a bank account process or a payment gateway process. In general, businesses that can operate virtually anywhere with an internet connection benefit the most. Businesses like IT management, coaching, consulting, social media agencies, advertising companies, service providers, stock trading, e-commerces, foreign exchange, cryptocurrency, and other online businesses. One of the most important factors you need to consider is the bank account. A trading and holding company without a bank account will not be able to operate. Recently, it has become very difficult to get a bank account for an offshore company without a real business presence or significant business activities. You must design your company structure in a way that opening a bank account should not be an issue. Sometimes you may combine an onshore and offshore company in order to benefit from developed and highly reputed banks. Another factor you need to consider is the capability to apply for an online payment gateway, like service providers like PayPal or Stripe or similar. So it's crucial to design your structure so it can pass this payment system verification process if you really want to receive money online. In general, you need to be very careful about how you design your offshore company structure so that it does not become a taxable company in high corporate tax jurisdictions. With a proper structure, you can save a significant amount in taxes and keep your money in your company, reinvest in your business or your new project. Remember, this is a corporate tax. The moment you receive money as salaries or dividend or any other forms of payment from this company, you will be taxed in your country of residence. So now the question is, how can you avoid paying too much income taxes and find a way to pay no or very low whenever you transfer to yourself? Well, this is something that has to do with your own tax residency and citizenship. Let me explain. Some countries require their citizens to file taxes regardless of where they live or their tax residency. This means that even if you move to another country and pay taxes there, you still need to file taxes in your home country. For example, the US requires all its citizens and green card holders to file tax returns and report worldwide income, no matter where they live. Eritrea also requires its citizens to pay a 2% tax on their income regardless of where they live. Unfortunately, there is not much you can do if you're a citizen of such countries, unless you give up your citizenship and become a citizen of another country. In most other countries, if you become a tax resident of another country and pay taxes there, you might not need to file taxes in your home country. Therefore, moving to countries with low or zero income tax along with your offshore company can save you a lot of tax. Another option is to move to countries that have a tax territorial system. A tax territorial system is where a country taxes only the income that is earned within its borders. So, under this system, foreign income earned outside of the country, isn't taxed by the country where you live. This means that if you live in a territorial tax country like Singapore, Malaysia, or Hong Kong, and you earn money abroad, that income isn't taxed by these countries. For example, if a company based in Singapore, which has a territorial tax system, earn profits from a subsidiary in another country, those profits aren't subject to Singaporean tax. Or if a resident of Singapore owns share in a foreign company, they can receive dividends from that company without being taxed by the Singaporean tax authority. To wrap up, minimizing your tax burden with an offshore company requires careful planning and understanding of different tax systems. Simply setting up a company in a tax haven won't make your tax disappear. You need to ensure your company isn't taxed in your home country by considering corporate tax residency rules. Understanding the difference between corporate and personal taxes is crucial. Designing your business structure to be taxed only in a low or zero tax jurisdiction can help save a significant amount. Consider specific tax regulations, the nature of your business, and the importance of having a bank account and payment gateway. Lastly, moving to countries with a tax territorial system like Singapore, Malaysia, or Hong Kong can provide additional benefits as they don't tax foreign income. With the right structure, you can minimize your earning and reduce your tax liability. Thanks for watching, and if you found this video helpful, make sure to give it a thumbs up and subscribe to our channel for more great contents in the future. We would love to hear from you, so leave a comment below with any questions or topics you'd like us to cover in future videos. And don't forget to check out OBAC for all your business needs. Whether you're looking for minimizing your tax burden, set up an offshore company, or need expert advice on corporate tax strategies, OBAC has you covered. Check the video description below to get access to our website and contact information. Hit the subscription button and ring the bell so you never miss an update. Thanks again, and we see you in the next video.